Hello, this is Miles Tello bringing you the JD Power Financial Services Intelligence Update for June 2024. This month, we're focused on one of our most requested studies, U.S. financial health and advice satisfaction, where we delve into how well consumers believe their primary banks and credit card issuers help them make better financial decisions. We released results to subscribing customers on June 12th, and there's a lot to unpack. Jennifer White leads financial health and advice research for JD Power and has joined me today to discuss highlights from our findings, including how important it is for banks and credit card issuers to provide advice and guidance to their younger customers. Welcome, Jennifer.
Thanks, Miles. Happy to be here to have this great conversation.
Great. Let's start with a brief overview of the study. Maybe you can just describe what it is, when it started, and how it's been received by our customers.
Sure. So the retail advice satisfaction study actually has been in place for 7 or 8 years now. But about 4 years ago, we took that study, which treats advice like a transaction, almost as if you would do research about how someone interacted with your mobile app or your contact center. We took that advice satisfaction and merged that with research around financial health to create the new financial health and advice satisfaction program. So it's been 4 years. It's wildly, interesting to our customer base. We have, a lot of customers that are very interested in this product. And, we love talking about, I'm very passionate about how banks and card issuers can improve the consumer's financial lives.
Excellent. And COVID had a lot to do with this, right? Where the focus on, making sure.
It did. Yeah, it did. We started actually going down this path before COVID. We had been authoring our questionnaire about building a new type of demographic that really took age and income and whether a customer could pay their bills on time and do they have adequate insurance. And we built a proprietary financial health segmentation here at JD Power. All of that happened before COVID, and it was just timed perfectly because the world turned sideways and we needed that demographic more than ever before.
We sure did. So what interactions are included in this study? When we hear about advice, we might think about that face-to-face interaction, but it goes well beyond that, right? What interactions are included?
It really does. So we talk about advice and guidance separately because when you hear advice, you think something formal like investment. We're going to move money from X to Y. But advice and guidance really spans a lot of topics. It includes quick tips on how to manage your budget. How do you save for an emergency? So topics beyond traditional investment or retirement related advice. We also talk about it in terms of channels. It's not just in person. It's not just in the branch. It could be on the telephone. It could be by email. It could even be delivered through intercepts in the digital experience. So what we're really looking to do is help banks and card issuers understand the optimal mix of topics, channels, frequency that has the biggest impact on reach of their customers of any financial health status. From those who are struggling every day to make ends meet to those who are quite healthy and are in a completely different position.
So let's talk about this year's results then. What jumps out at you? What surprised you most from this year's results?
Well, so you mentioned it at the top of our conversation. One of the things that really stands out is just the frequency with which the customers who are under age 40 are recalling advice or guidance. So in the 4 years since we've been measuring this in the combined study, recall of advice or guidance has been slowly increasing. And on average now, two of every 5 customers will recall that they had a value-added interaction with their bank. For those customers under the age of 40, we're at 60%, 3 in 5. They are actively seeking and then therefore actively recalling more value-added experiences with their bank partners than customers that are older.
So they're recalling, how well are they saying that their banks and credit card issuers are doing in delivering this advice and this guidance?
It's a bit of a mixed bag. So most of them, when they recall the information, High proportions, greater than 75%, say that they act on the advice that they're given. But when we say to them, how satisfied are you with advice? They don't use the top end of our scale. It's really more somewhere, in the it's all right, range. And if we then say to them, well, tell us about satisfaction with some of the specific services and tools that banks have put in place to complement this advice and guidance, that's also a little bit more moderate. They're seeking something more than they're getting today, but the good news is at least they're having more interactions than they were having in the past, which, awareness and use is hurdle number one.
That is hurdle number one. And so they must be doing something well, right? Given that the usage is increasing. What is it that's actually
They are.
going
So
well?
one of
Yeah.
the things, yeah, I think they're really helping customers. Banks are helping customers, particularly those under the age of 40, start to understand some financial literacy fundamentals. Why is it important to have an emergency savings account? Should you keep that emergency savings account with your primary bank, even if you get a low interest rate there? Or is it something that's worth chasing a high yield account for? Are there ways that they can review their spending habits to follow all those TV ads we might see about services to reduce your subscriptions? Or can they help you figure out how to set up automatic savings? Advice and guidance can mean so many things, again, that have very little to do with ultimately giving a client instruction on how to invest or plan for retirement. It's about how to manage their financial lives on a day-to-day basis that sets them up to be successful for the future.
Sure. And I know that our discussions, our customer discussions, are highly customized, tailored based on the responses that are provided for each of our customers. But is there anything kind of overarching that jumps out to you as something that you find yourself advising most of our customers about, something that they can be doing better that's pretty consistent across the industry?
There's two things that stand out to me. One is the importance of personalized engagement. Customers are not going to just we think you should take a certain action statement without a follow-up statement that it says, here are the pros and cons. Here's why this is right for you specifically, dear customer. They're being quite savvy in what advice they follow. If you think about the way consumers today get bombarded with information and advice in general about their lives, they're becoming quite savvy in weeding out things that are generic versus personalized. The second thing that's really important is this mixture of quantity and frequency. It's okay. Our study first is based on, did you have at least one interaction? That's what you have to, have in order to be in the research. But we know that the tipping point to truly delight your customer base is having at least 3 of these value-added interactions in a year. A majority of customers prefer a frequency of at least quarterly interactions, but there's also a high proportion, I think it's around 40%, that actually would love to have something monthly. So this idea of quantity and frequency is becoming even more important than it has in the past. But if you do that high quantity and frequency and it's generic, you'll lose their attention.
Got it. Well, we're JD Power. We measure brand satisfaction. Now's the time where we need to talk about brands. What brands are doing particularly well? Banks and credit card issuers in this space.
Well, when it comes to retail banking advice, the 3 institutions that are performing above average are Citi, Bank of America, and Chase. If we're thinking about the support that banks give or credit card customers give to their customer base, both Bank of America and Chase are, above the average on all the ways that we measure that. There's a few other institutions that also perform well. In fact, there's 8 banks in total that are higher than average for banking support. And American Express on the credit card side has been, a stalwart in supporting their customers in terms of issuer action.
Well, those are certainly some familiar names to us in this study. I know that they've been setting the tone in this space for a while now, and it appears they continue to do so, and should be familiar names to those who are listening as well. So subscribers receive JD Power's monthly Polaris report. Do you want to take a moment, Jennifer, and just explain what the Polaris report is?
So our satisfaction research happens once or twice annually with waves and that of data. So what we did is built a Polaris Pulse research, which allows us every month to track some metrics, specifically the customer makeup or the consumer makeup of financial health status, and then also gives us space to ask about hot topics of the month. So, in March, we're talking about tax preparation. We've been monitoring the impact of inflation on customers over time. So we're able to have a little more flexibility in this monthly report to address things that are happening in the marketplace that could have an impact on financial health.
And I know it's been a very popular component of the overall deliverable for our customers to be able to track how current events are impacting financial health and people's perceptions about their primary bank and credit card issuers. So
it's not uncommon for a customer question that they've asked me to show up in a month's Polaris so that we can actually get real answers to those questions.
The secret's out. You're going to get a lot of questions now. All right. Well, more details are in the post, including a link to the JD Power financial health segmentation description so you can understand the different groupings that Jennifer referenced throughout our discussion. I will be back in July to discuss our latest findings from our financial advisor satisfaction study, not to be confused with the financial health and advice satisfaction. This is advisors that are providing investment advice to consumers and their satisfaction with the firms that they work with.